Another few trillion coming. Quite frankly, I've lost count. Does it matter anymore, some will ask, but of course it really does. The only question is where exactly is the money going and how much of it will ultimately end up helping those in need. You came here for the truth, so let me unveil that for you. Today we're going to look at the stimulus package, the infrastructure package being put through. We'll see what happens. They will, of course, dissect it here and there, and ultimately you get a lot of money that is being pumped into certain sectors, benefiting certain companies. Looking at all of it in detail is important because not only as an investor, but as an individual, you can see what will happen over the next several years. It kind of gives you a little bit of insight, and then you can make certain life decisions depending on what you think is right or wrong. Today, we're going to look at some of those details, but I also want to cover what's happening in the financial markets. I want to look at that because I think it's really key to understand a lot of the technicals that are happening here and how they are really playing a role in all of this madness, this bubble that continues to grow. So let's get into it right away. In this video here, I'm going to cover the basics as they lay it out, but in a video I will do in the next several days, probably on Sunday or Monday time frame, I'm going to look at it in much closer detail and as an investor, give you the input that you need to start making some decisions if you want to, let's say, take advantage of it. All right, you got $2.25 trillion in spending as well as corporate tax hikes. Now, they were talking about potentially $4 trillion. It looks like it's a lot less. So I was expecting something much bigger. Hey, it's only 2.25 trillion, no big deal, right? Well, this is of course just one of many. They're going to do more and more and more. So we'll see what happens. I have talked about the effects of this. I have talked about what happens when you engage in these stimulus programs. There are a few things that I just want to highlight. I believe when you have the two sides of it, the fiscal and the monetary, when you see what the government does and actually putting money into infrastructure, that's certainly better. There's no doubt about it. That's certainly better than simply buying mortgage-backed securities or buying nonsense garbage that the Federal Reserve does. Okay? If you want to compare those two. However, if we look at the infrastructure and then we start to see what's going on in here and who ultimately stands to gain, that's the question that we need to start asking. So, of course, I'll lead with follow the money. All right. The 4-part 8-year plan dedicates $620 billion for transportation, including a doubling in federal funding for public transit. It would provide $650 billion for initiatives tied to improving quality of life at home, like clean water and high-speed broadband. There's $580 billion for strengthening American manufacturing. I really want to see what that's all about. Some $180 billion of which goes to what's being billed as the biggest non-defense research and development program on record, and $400 billion to address improved care for the elderly and people with disabilities. So here we have it. That's a rough breakdown of what we're seeing here. Now, people would say, that's great. More transportation, more clean water, and high-speed broadband being put in. They got to put the fiber everywhere. You've got better manufacturing. You got all this stuff, right? And then you break it down and you start to see that actually what happens here is you have a big problem up at the top. So we have this problem here, and this might be, the need for, let's say, stimulus. Okay. And in order to get this down to the people who need it most, you've got different things that are actually in the way. Problem is we need jobs, let's say. Okay, well, somebody steps in over here. Let's call them the lobbyists or the corporations. They decide, you know what? You need to be spending money on this or that. And so they are able to capitalize on this particular problem, and then they give their product and service to those people. Now, that might be okay. The only problem is when you're working with the big G, government, this right here is usually very wasteful, and often the reasons why these things are put through are because of these lobbyists and these corporations, not because of the initial problem. That initial problem is simply used and taken advantage of. All right, the plan would increase the corporate income tax to 28% from 21% and set a 21% minimum tax on global corporate earnings. This tax increase will be fully paying for the investments in the plan over the next 15 years. Now, we've heard that before, and only time will tell if that's actually going to be accurate. But what happened last time when the corporate income taxes dropped down? Then some companies started to bring back their basically the earnings and say, hey, look, we'll pay the taxes because they're reduced. We're going to have incentive to bring that back. Now you're just going to see those companies bringing it offshore. And obviously that never really stopped anyway, but you're definitely not going to have people with any incentive, corporations with any incentive to bring their money onshore. I think this is actually quite worrisome over the longer period. This Bloomberg article had some nonsense that I wanted to share with you. I couldn't believe I was reading it for myself, but here it is. The major policy mistake of the last 2 decades, by my estimation, was the failure of both the Federal Reserve and the Congress to stimulate the economy sufficiently. Now, if that's not the biggest joke I've ever heard, I really don't know what is. They didn't do enough stimulus for 4 decades. For 4 decades, interest rates have been declining. Since the financial crisis, there has been a record low interest rate and a record amount of money being pumped in from all different stimulus packages since that point and quantitative easing. And that, to me, makes this a complete joke. And that leads into the next part. This article here is trying to tell you that there's nothing wrong with pumping in money in every direction. In theory, high levels of government borrowing can crowd out private investment, drive up interest rates, and generate inflation. None of that has happened in recent years. Indeed, economic policymakers have largely been concerned about the opposite: interest rates that remain too low and the possibility of stagnation. Janet Yellen and Powell said that they don't see inflation as imminent and believe that the Fed has adequate tools, pretty funny, to deal with it if it does emerge. Yes, that's right. There is no inflation. You don't have to worry about inflation. And so we can continue our policies. Shut up and sit down. That's what they're telling you. We have had a prolonged period of low interest rates, and people are not really afraid of inflation. Let me tell you something. You look at it, look around the world, look around today, and look in history. People are really worried about inflation when they had to deal with it, not before it came. That's the worry. This article here is talking about the bubble that we see in the stock market. It made a few points I wanted to share. There was a time before the advent of quantitative easing when authorities began money printing with an abandon that puts toilet roll makers to shame, in which stock prices were a barometer of economic health. The stream of corporate earnings and dividends determined stock valuations in days before the monetary taps were fully turned on, a development that washed away the apparent need for such logical or common sense linkages. Unfortunately, stock investors do not seem to have caught on that a stock bubble feeds on itself. Okay? Listen to this. It encourages the idea that all is well with the economy, which in turn encourages yet more speculative investment. We are in danger now of allowing the narrative to be dictated by asset price inflation rather than by real developments. Only when asset price tremors become an earthquake will capsular optimism be dispelled. And that to me is actually quite true. I'm glad to see that written in print. It's not something that I have to conjure up in my head. But this tells you what's happening today. I've got some charts that I want to show you just to give you a little bit of insight of what's happening. Equity call volumes have been declining since late January. Equity call volume you could see right now, as depicted right here in that chart. These things do move up and down. But in the short term, we have seen this, maybe a risk off position. I don't know, too early to tell, but certainly wanted to show that to you. You can see the massive increase in bullish option activity over the last year and the recent decline have both been led by retail traders. They break it down: small traders, and large traders, and blue is the small traders, clearly evident right there. The decline in call volume since mid-February has coincided with the rising pace of reopening, showing you in an inverted sense right there. Just to break it down, Apple maps mobility for the US inverted, and that's the blue line, and then the green is single stock call volume. And just to show you, the argument made here, by the way, these are from Deutsche Bank, is just saying that people have other things to do now, that they're not just sitting home in front of their computers and starting to trade on Robinhood and their other brokerages. This is kind of the claim, but we'll see how that really plays out over the next period. I just found it interesting. This is certainly a bonus for the airline industry at the top and the restaurant industry at the bottom there. You could see that it's still down from the peak previously, leading into 2020, but it has been coming up. So that right now just gives you a little bit of insight in what's happening across the United States. 2/3 of the anticipated $400 billion in stimulus payments have already been distributed. And, there's still more to come. As that money comes online, you're going to see people spending it, paying off their debt, perhaps if they have to. But, once that runs out, that's the challenge. Where do we go from there? Because they need more stimulus and more stimulus, because there are still millions of people that are without work. So maybe that's where they're going with this whole infrastructure package. That's kind of part of that, to stimulate jobs and so on. But we only know after the fact. We'll see who gets the contracts. We'll see where all the work goes and so on. Couple quick points right here. Take a look. Short sellers are coming for SPACs. Now, I think this was from several days ago, but the point remains the same. Investors who bet against stocks are targeting special purpose acquisition companies, one of the hottest growth areas on Wall Street. The dollar value of bearish bets against shares of SPACs has more than tripled to about $2.7 billion from $724 million at the start of the year. And then they're just saying how they're going out there and trying to sell them short. So I just want to watch this very clearly. I mean, we saw how much money was flowing in, and it can easily flow out. But who wins, who loses along the way, that's the really, somebody with who, has that astute kind of mindset will be able to learn their lessons. Maybe they'll be able to pocket some of those profits, or maybe they'll lose out. But this is something that is relatively new in the game, at least the way that they're doing this on this scale. So we don't really have that historical backing behind it to understand, what are the potential pitfalls and where this can go. This is what I truly worry about. You see how much money is being spent on the war machine, and to me, it's the worst. It's the worst thing. It's something that I don't give my opinion, as you know, if you watch this channel, but this is something that I find so sickening on the darkest of levels. But anyway, Microsoft wins the US Army contract for augmented reality headsets worth up to $21.9 billion over the next 10 years. So here they are making technology, doing this. Oh, what kind of, what part of the infrastructure package is this type of activity going to be? And, you're giving money to the tech companies, but look at what happens here. It goes into building this this kind of thing. And, I'm at a loss for words when I see this type of stuff. It's so sad to see where it actually goes and how many lives will be lost as a result of all of this. Read, anyway, read War is a Racket by Smedley Butler, and it'll just open your eyes. It's such a short little book. You could find it online, I'm sure. Smedley Butler, and you'll learn a thing or two if you haven't read it already. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce, you can do it for free at my website, theamazongps.com. If you want to understand the financial system, everything you need to know explained so easily, it's right here in these two books. You can check them out at the link in the description. And if you haven't seen this video yet, you absolutely want to take a look, click it, and I'll see you there.